From the financial centers of the world, this is Bloomberg Markets with Alix Steel and Guy Johnson.
Tuesday the 14th, 3 p.m. in London, 10 a.m. over in New York. We're 30 minutes into the trading day in the United States. From London, I'm Guy Johnson, Alix Steel over in New York. Welcome, everybody, to Bloomberg Markets. Alex, CPI disappointing, coming in a little lower than expectations. Used car prices, I note with interest, dropping quite sharply. I guess that is transitory.
Maybe I did time it well. Remember I bought that Jasper?
Or maybe you didn't.
Maybe I did, because maybe I was on the cusp of sort of when it was rolling over.
Okay.
It could have been worse. I don't know. But it's a fair point, and I take your meaning. Jasper, my new used car. Okay, so this is kind of where we're set up. So what happened initially when we got that CPI number, when it disappointed to the when disappointed, we had a spike higher within the S&P. Dollar drops like a stone. You have a teeny tiny bid into the back end of the bond market. Then that reversed about 20 minutes ago or so. You have the S&P now flipping into negative territory, down by 0.2%. Financials, though, still the outperformer. You wonder how long that's going to last. If you have higher PPI, not as high CPI, where's the margin squeeze? That's the question that's going to be reigning through the equity market. Then you're getting even a bigger bid into the bond market in the long end here in the U.S. You have yields now down by about 4 basis points. Do we wind up seeing margin pressure? What does that mean for longer-term growth if inflation is indeed transitory? A dollar still down, but off the lows, down by 0.1%. Crude kind of moving on its own. Sure, maybe an inflationary impulse, but this is really about another storm going to hit the Gulf Coast. We'll talk about that in just a second, Guy.
I think it's interesting that stocks are really struggling to hold on to the gains. Dave Wilson was pointing this out earlier. It was a similar story yesterday. Initially out of the gate, reasonably okay, then starting to fade, struggling to hold on to those gains that were made early on. I think that may be a signal that maybe things are a little tougher than we thought in the equity market. Anyway, it's all about inflation today. U.S. consumer prices a little less than forecast in August, suggesting that some of the upward pressure on inflation maybe beginning to wane, or maybe this is just a Delta story. Airline fares coming down, used car prices, I will continue to reiterate this, also falling fairly sharply. Mike McKee, Bloomberg's international economics and policy correspondent, joining us now to dig through the details.
Well, you call this disappointing, but who's disappointed? Jay Powell's not disappointed. Maybe investors looking at margins for corporate profits, they might be disappointed, but we'll see how this all plays out. Let's take a look under the hood. Of course, the 0.1% gain in the core rate was the real surprise. It's only up 4% on the year now, so it's definitely slowing. You mentioned used cars down 1.5%. Airfares were down 9.1%. And car rental down 8.5%. Here's a case of a problem solving itself. Car rental companies sold off their fleets at the beginning of the pandemic. They went into the used car market to get more cars and drove up the prices. Now they've got their fleets redone. Used car prices are down. Car rental prices are down. Hotels and motels down. Now, hotels and airfares may be a story of the pandemic because with the rise in the Delta variant, maybe people traveling a little less, but it's also the end of the summer and people are going back home after vacation, so that may be a reason as well. Let's take a look at an area, though, that is a real surprise, and that was housing and food. People had expected that we might see a rise in the food away from home, restaurants, because they're going to have to pay more to get people to come back to work as waiters and waitresses. Doesn't happen. They're paying more, but it's at a much slower pace, half of what it was the month prior. Same is true with housing. Housing not showing any real movement from the last couple of months, even though we've seen this 13-14% increase in home prices over the year. So the question becomes, where does it go from here with the Fed? Well, it looks like the bond market is betting that the Fed is either going to stay on track or slow things down a little bit because you're looking at 5-year break-evens here. They immediately fell off the cliff. Inflation, not a danger to the most sensitive area of the curve to the Fed right now.
All right, Mike, thanks very much. Bloomberg's Michael McKee. And in my defense, I bought Jasper in July, so I kind of got it there. All right, just some breaking news on what's happening with the 10-year falling now to the session low below that 50-day moving average. We're now at 1.28 on the 10-year. All right, the main event in New York City last night was the progressive Democratic Congresswoman Alexandria Ocasio-Cortez using New York's premier fashion charity event, the Met Gala, to make a political statement. She wore a white dress with the message emblazoned in bold, blood red, tax the rich. AOC's not so surprising statement, although surprising venue, comes as deep divisions within the Democratic Party are exacerbating uncertainty over President Biden's tax and spending proposals. Joining us now, Anne-Marie Herdern, a Bloomberg Washington correspondent. We love it. It's like, what, $300,000 to get into the Met Gala, and then she has a tax the rich on her dress.
Yeah, so many are calling hypocrisy on the Congresswoman, given the fact that how high those tickets are. To her defense, and she did mention this, a number of New York elected officials are invited to the Met Gala every year. And Congresswoman Carolyn Maloney was also there with another message about women and women's rights, voting for the ERA, the ERA. This comes down to, though, is obviously what is happening right now, and a big debate right now in Washington, D.C. regarding the tax plans for the reconciliation bill. It's going to be debated today and tomorrow in the House Ways and Means Committee, and then before it goes to the budget. And really, Alex, one thing you mentioned there and signaled there is that not every part of the Democratic Party is getting what they want in this, and there is going to have to be compromises. For the Biden administration, it's coming well short of some of the higher rates they wanted. When you look at the likes of capital gains, they wanted just under 40%. It's not getting anywhere near there. When it comes to corporate rates, though, it's a little bit higher than what moderate Senate Democrat Senator Joe Manchin said he'd be willing to vote for. So there's going to be a lot of back and forth in this. We also have to wait, of course, what the Senate proposes in their own. But it's going to be a big back and forth fight, because a lot of these Democrats have different views on how you should be raising taxes in terms of income and as well as terms of assets.
Anne-Marie, great stuff. Thank you very much indeed. Bloomberg's Anne-Marie Herdern joining us from D.C. Let's turn our attention to what is happening on Wall Street. Goldman Sachs is said to be getting a new CFO. Stephen Scher retiring, stepping down from the firm. He's going to be replaced with Dennis Coleman. Joining us now with the details, Wall Street reporter Sonali Basak. Sonali, why is he going to be the new CFO? What has this guy got to offer that others don't? What does it signal about the direction of travel at Goldman Sachs?
Certainly. You see musical chairs again over at Goldman Sachs. Stephen Scher stepping down, certainly a big deal. When he had come into this position at CFO, it was an early move right as David Solomon was named CEO. He really helped execute a lot of the strategy and plan. Now, Dennis Coleman, global co-head of global financing, is going to be stepping into that role. Another investment banking veteran, financing in particular. We see Goldman really leading in the financing universe. I also want to mention another big move as this is made. We have Beth Hammack, who is one of Goldman's most senior women, stepping into Dennis's role. It's unclear, according to my sources, whether she will be remaining as chair of TBAC, which is the Treasury Borrowing Advisory Committee. It's what Liz Capo-McCormick at Bloomberg likes to call the Treasury's bond whisperers. So she is a very important person in the market, and certainly at Goldman Sachs taking a new role.
And Shalini, before we let you go, New York Times having a piece out that Elizabeth Warren is asking the Fed to break up Wells Fargo.
So this is interesting. It's as, of course, we know they've gotten another regulatory penalty just as they were looking like they were turning the curve here. I also want to mention, in addition to this report by the New York Times, Elizabeth Warren sending this letter to Jerome Powell, you also have last week Senate Banking Committee Chairman Sherrod Brown saying, you know, Wells Fargo's, the new fines show that the bank is too large to manage. So you have that scrutiny from regulators and lawmakers piling on Wells Fargo, but it's unclear what this means for Charlie Scharf's turnaround, though it does propose complications.
Indeed. All right, Sonali, thanks a lot. Bloomberg Sonali Basak joining us there. All right, another top story we're watching is China. Its government is assembling a group of accounting and legal experts to examine the finances of China Evergrande Group as restructuring looms. Joining us now with more is Timothy Tan of Bloomberg Intelligence. Timothy, what do we know? How bad could it get?
Well, in our view, the appointment of advisors means Evergrande is at the next stage of dealing with its balance sheet and its liquidity situation. The recent approval by the regulators to allow the company to renegotiate terms for their debt liabilities also means that the authorities is giving the company time to do this. Now, the advisors are going to probably advise this. We believe that the inventory liquidation is the only way for the firm to quickly get its liquidity situation under control and financial leverage down. Inventory is largely property in development. Divestment may be done via selling portions of the project via M&A or complete sale to other real estate firms in the country. provincial and central government real estate firms are most likely to be the main buyers because private firms are unable or unwilling to save a competitor. Sales will have to be done at a cost to Evergrande's stakeholders. So moral hazard is not generated. Yep.
Timothy, I'm just going to jump in. Thank you very much indeed. A few glitches on the line there. Timothy Tan of Bloomberg Intelligence. Greatly appreciated. Hurricane Nicholas has made landfall in Texas. It's bringing torrential rainfall already that is threatening to unleash flooding in Houston and in other parts of Louisiana, which, to be honest, is still recovering from Hurricane Ida and the flooding that followed there. David Webb joining us now in Houston. David, talk me through what we're seeing on the ground at the moment. We've only just recovered from Ida. What is this going to turn out to be like?
Yeah, so far it's looking like Houston and the offshore oil complex has mostly dodged a bullet. You are still dealing with mostly a power loss issue, not so much of a flooding issue, although we're still watching for that as water starts to flow through the streams. About 480,000 customers are without power in Texas, and under the 95,000, as you say, in Louisiana, still recovering from Ida. They're without power. We know the Colonial Pipeline has said that some of this pipeline, a key conduit to the Northeast, has shut right now due to lack of power, and the Port of Houston is closed until 7 o'clock tonight.
All right, David, thanks for the update. We'll definitely be watching that, particularly as some companies had a hard time getting oil production back online. The IEA warning about that also earlier this morning. All right, we're going to break all of this down for you, what it means for the market action. Coming up, Victoria Fernandez, Crossmark Global Investments Chief Market Strategist, will be joining us. She's been in the consumer. TJX Capital One among her top picks. Will break that down. This is Bloomberg. Inflation prices wind up surprising, not to the upside. So you wind up having higher PPI prices and lower CPI prices than expected. Is that what's worrying markets right now as we continue to roll over here within the S&P? Joining us now with more, Victoria Fernandez, Crossmark Global Investments Chief Market Strategist. If you have that squeeze, that equals rough time for profit margins. Are we in for a rockier 2020 when it comes to earnings, and how are you modeling that right now?
You know, Alex, we were already anticipating that we would see margins get squeezed a little bit because when you look at the second quarter and the earnings that came out, margins were at all-time highs. They were fantastic. And we anticipated we would see that come down a little bit because of the supply chain issues that we had. So you look at the numbers that we see now, so many companies were talking about being able to pass on those price increases. We heard it from a lot of food companies like Chipotle. We heard it from Procter & Gamble. So now it's looking like perhaps those are not being passed on maybe as much as we anticipated. You do get a little bit of a margin squeeze, but I think we're going to see maybe a little bit of a reversal next month, kind of like we're anticipating in the labor market. We think Delta variant played a huge part of the less than expected labor numbers. And I think you saw that in CPI too, when it comes to the transportation to hotels and motels. A lot of that pulled back when the Delta variant was increasing. And so as that peaks, which hopefully is soon, we'll see some of that CPI inflation come back perhaps next month.
Victoria, the big thing that drives the market at the moment is liquidity. You've got all these worries, be it a margin squeeze, be it labor shortages, all kinds of factors coming into play at the moment. And there's plenty to think about, yet there's a huge amount of liquidity still out there. Does today's data, does the data broadly sort of push us towards the idea that maybe the Fed taper comes later and that liquidity lasts for longer? Because this seems to be the key pivotal moment that we're all waiting for.
You know, Guy, I think the reports that we have seen lately actually puts the Fed in a really good position. If you have people saying they need to go ahead and taper now, they have some precedents to do that, right? Because you've got Bank of Canada, Reserve Bank of Australia, you have ECB, not officially tapering, but reducing their purchases. So they have a little bit of precedence to go ahead and taper now if they want. But coming back to the two reports we just talked about, the labor report and the CPI report, that gives them a little bit of breathing room to say, you know what, September is not the month to announce this. It gives them a couple more months to wait until the next meeting in November. So I think they're sitting in a really good position regardless of which way they want to go. In reality, whether they start tapering September, November, December, I don't think it makes a big change in our outlook.
Well, but to Guy's point about the liquidity issue, is it in the Bank of America Fund Manager Survey, which we love to look at here at Bloomberg, because it really is a granular look into how investors are thinking about it. In their last survey, they said that there was disconnect between asset prices and fundamentals, and you can understand that's going to be basically because of the Fed, and that disconnect is actually growing. Do you agree with that kind of assessment? And we saw it just in the last few days. You have strategist after strategist calling for a correction or being worried about it, yet we're near record highs for the S&P.
Yeah, I mean, the liquidity is out there and it's not going away. Even if the Fed starts to taper, the balance sheet is still growing every month. It's not that it's declining or it's reducing, it's still growing. So the liquidity is out there and people know that. And I think that's why you continue to see markets reach towards new highs. We're only, 2.5% off of a new high again. So I think that liquidity is there. It's supporting the investor. They're going to go ahead and keep investing in equities, which we think will trend higher, even though we're going to see some rockiness through the end of the year.
Which equities? A number of segments of the market have already had significant periods of either going sideways or underperforming in fairly significant fashion. Small caps look like one of those. Victoria, if we do see inflation abating, does that mean actually we start to see again another rotation sweeping across the market? Maybe we start to see small caps and that segment of the market coming back?
There probably will be multiple rotations, Guy. I mean, we have seen it over the last 6 months. You know, the question of growth versus value and small caps coming in and the reopening play and how you want to position yourself. And it's really kind of a fool's errand to try to time all of those perfectly. So when you ask what equities, I think an investor has to look at their total portfolio and say, look, yes, we like some of these growth names, some of these secular growth names that are there that have done so well, but maybe trim those names a little bit. It's what we've done, and build that portfolio out a little bit, whether you call it a barbell or a balanced portfolio, and add some cyclicals, add some value names. That way, when you have the choppiness in the market that we anticipate you're going to have, you have that balance built in.
So where, in our tease to you, we talked about TJX being one of your top holdings. So where do you get that value now?
Yeah, I think you look at where the consumer is. We really think the consumer is kind of the backbone right now. We know that savings have come down from where they were maybe a year ago, but the demand in this economy is so strong. We're not seeing the demand lack, and the consumer is there to do that. So we think TJX is a great way to play that as stores open back up. We like Capital One. I mean, we've talked before, Alex, that we've always liked the credit cards, even during the pandemic, MasterCard and Visa, because of the payment component. Capital One ties in a little bit more on kind of loans with consumers. And as we start to open up and as they start to spend more, we think that's a great way that you can play the consumer while still having that balanced portfolio.
Victoria, we're going to leave it there. Great stuff. Thank you very much indeed for your time today. Really useful. Victoria Fernandez, Crossmark Global Investments Chief Market Strategist down there in Texas. Let's hope the weather is kind. Coming up, Boeing is expecting jetliner sales to bounce back. We're going to have more on that story next. This is Bloomberg.
It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Amazon is going on a hiring spree. It will hire 125,000 workers for transportation and warehouse jobs in the U.S. Amazon will offer average starting pay of more than $18 an hour. The company also will offer sign-on bonuses of up to $3,000 in some locations. Senator Elizabeth Warren wants the Fed to break up Wells Fargo. According to the New York Times, Warren wrote Fed Chair Jerome Powell saying the bank has run out of time to fix problems that have hurt its customers. She wants to split the core banking activities like checking accounts and loans from its Wall Street activities. Last week, regulators fined Wells Fargo $250 million over its management of mortgage accounts. And Boeing expects global jetliner sales to bounce back from the pandemic later this decade. That would contribute to a potential $9 trillion market for aerospace and defense products and services, and that's 5.9% larger than what Boeing forecast last year. Still, the company warns that the recovery could come in fits and starts. And that is your latest business flash. Guy?
Okay, let's pick up and talk more about that. Ridika, thank you very much indeed. Boeing's outlook, I still slightly struggle with how you can forecast something 20 years forward, particularly with the uncertainty that exists right now. We'll talk about that in the next hour. Let's talk about what is happening with Boeing in a bit more detail right now, though. David Wilson breaking down the numbers. Dave, over to you.
Well, thanks, Guy. I mean, Boeing is now talking about $9 trillion in terms of aerospace and defense in the next decade in the markets that it serves. And that's up from $8.5 trillion a year ago, $8.7 trillion 2 years ago, pre-pandemic. And, you know, it's a roughly even split between planes, aircraft services, and defense and space. So, you know, Boeing getting more optimistic because, in part, as they put it in a press release, the global market is recovering largely as Boeing projected in 2020. So you've got domestic air travel coming back. They figure regional markets will be next. And then, you know, when you talk about long-haul flights, that they'll be back to pre-pandemic levels by 2024. So, you know, you put that all together, that's going to mean demand for more planes. Boeing looking at $3.2 trillion worth of spending, I'd say a little more than a third of the total, 19,000 jets. Clearly, they're optimistic for the next 10 years beyond that because, you know, if you double the numbers, you don't get to what their 20-year projections are at $7.2 trillion and more than 43,000 planes. That number up from a year ago. And, you know, put it all together, Boeing needs optimism, and so do their stockholders because, you know, this is a company whose shares have never recovered from the hit that they took as a result of the two 737 MAX fatal crashes and the grounding of that plane.
Yeah, it is pretty incredible, those projections, I gotta say, over $7 trillion. All right, Bloomberg's Dave Wilson, thank you very much for joining us. And we will be talking to Mark Allen, a Boeing Chief Strategy Officer, in the next hour on the European close. I think the guy's a little skeptical there. It's just the lack of visibility that everyone else seems to have, Guy, is puzzling to me.
The airline industry at the moment has a very murky crystal ball. I don't know how you can project forward. They are leaning heavily on a continuation of the pickup we're seeing in freighters.
Yeah.
I think they've got a problem in the A321 space. There's a bunch of things going on. I'm looking forward to this conversation.
I don't even...
Boris Johnson. Sorry.
They don't even have a crystal ball. They have an 8-ball. Like that's what I feel like the airline industry has, is an 8-ball. Shake it, see what comes up. But you were going to say that Boris Johnson is moments away. I was going to say that Boris Johnson is about to appear behind a podium. I have to say, I think our podiums are better. There's Boris Johnson's podium. Guy Johnson's podium, I think, is better. Like, ours has got lights. Look at that. Anyway, we're going to discuss the vaccination rates in the UK pretty soon. We're going to also talk about what is happening with the relation between Delta and the economy with Austin Gilsby. So 3:30 in London. We are rapidly approaching that moment. Boris Johnson is expected within the next few minutes to appear behind that podium at 10 Downing Street. The idea of this press conference is that he is going to be briefing the nation on the plan for the winter. We're going to be getting COVID shots, additional COVID shots, booster shots, Alex, for the over 50s. Fortunately, I do manage to just slip in not fair.
To that category.
I've been trying to call you old all programming, and then you just blow it for me, which I knew was on purpose. Yes, Guy, you're old. You get a shot next week.
And hopefully my children will be getting shots as well. So all of this is coming together as we prepare potentially for another difficult winter, because flu is coming as well, and that's going to be a problem too. Basically, I'm showing you this because I also want to segue into what is happening in the States and kind of draw a connection between what is happening with COVID, certainly here in the UK and in the United States, and what is happening with the CPI data. Transitory has been a word that we've been talking about for a while. Are we starting to see evidence of that transitory nature of this inflation surge starting to come through? Or is this basically Delta slowing the economy down, and therefore a temporary slowdown in inflation is what we're seeing in the August data as well? So basically, that's the pitch. US consumer prices basically coming through a little less than forecast in August, maybe suggesting that we are, well, team transitory is right. Part of team transitory is Austin Gilsby, former White House chief economist and professor now at the Chicago Booth School. Austin, great to see you. Thank you very much indeed for joining us on what is a great day to talk about inflation with the CPI number coming through. You, as you've indicated on a number of occasions, part of that transitory camp. My question to you is this Delta just slowing things down, and therefore does the inflation narrative pick up as we go into winter?
Well, a little bit, it's Delta slowing things down because the virus drives the economy. You see that in the UK, you see that in the US, you see that everywhere. But the team transitory folks like me, we've been saying that these pandemic-related sectors, the inflation rate was going to slow down. And now it is slowing down. And then people are saying, oh, no, wait a minute. Maybe it's just slowing down for a totally different reason. I don't think it's a different reason. And the thing that was temporary are the bottlenecks. So if we have some cooling, but they can get the computer chip plants restarted in Asia so that we can produce new cars and we can produce a bunch of the electronic equipment and appliances that people want to buy, I think we could have, let's call it permanent relief from the transitory inflation. What
does the time look like for that? Like, how long do you think transitory means when it comes to restarting or implementing a chip factory, for example, or clearing ports over in China to the demand pickup? I'm wondering what the balance seesaw looks like.
Yeah, look, it's important to figure out that balance. Before Delta really started raging out of control, I thought that we would have modestly higher inflation for a year, but that beyond 1 year of inflation, it probably wouldn't last. Now with Delta slowing things down, maybe it would be even less than that. But I would hope that the Fed, when they committed to their new strategy, where they're going to look at past average inflation rather than just what's happening in the moment, that they would kind of stick to it for more than just a couple of months. That if a year from now you're still seeing rapid inflation, then the Fed's got to be thinking more about a permanent. But I think on that 6 to 12 month time frame, it's really suggests temporary is the order of the day.
Okay, I hear what you're saying when it comes to material shortages that we've been experiencing, and you bring up the issue of chips. What we're now starting to see is a shortage of labor as well. The New York Fed had a survey yesterday. The consumer is certainly expecting inflation to remain elevated for quite a while. And that, in theory, should feed through into wage demands. How do you see that side working? And do you think that we are going to see the supply side of the labor market improving in the same way that we're seeing the bottlenecks easing in the material side of what we're watching?
In a way, I don't think that. Even though I'm on team temporary, I do think, in my view, the main thing that's been leading to the labor shortages has been a bunch of people who don't want to go to work because they're afraid that they're going to get the disease. So if Delta starts rising more rapidly, I actually think that could make the labor supply problem worse in the short run. Whether that goes through into wages, that has more to do with do people and do employers view this as a temporary thing or a permanent thing? And I still think that if you look at the market-based measures, they show something, market-based measures of inflation expectations, they show something very different than the consumer surveys, which are the employers and the market don't view that inflation is going to last for more than a year or so.
What's interesting, if you look in a small business survey, for example, Goldman Sachs had one out, and like 81% see an increase in pricing pressures since the last survey back in June, and 86% say they're concerned again about inflation, et cetera. And I just have to wonder, on a small business, medium-sized business level, like what the world looks like for them right now.
Well, right now, there are tons of price pressures. As you know, you look and supply stock out pressures. It's tough to find workers. It's tough to get materials. We've gone through this boom and bust cycle on lumber prices, on gas prices, on a whole bunch of the prices that they need to operate their business. So and you don't know what's going to happen to demand because the virus is up, the virus is down. So I definitely think this is a very difficult and uncertain time for all business and especially for small business. And it is also a renaissance of the birth of entrepreneurship. If you look at the data on new firm births, we're way, way higher than what the trend has been in the last 20 years. These are some of the biggest years for entrepreneurship that we really have ever seen.
Yeah, which is certainly something that Europe is watching with a great deal of interest. We're seeing a similar pickup over here, but we're watching what is happening stateside with a great deal of interest on that front. Austin, let's talk a little bit about, therefore, what the policy response to all this should be. The Biden administration is still pursuing a big fiscal spending plan. We're still trying to work out whether or not the Fed should be tapering. Do we need more monetary stimulus at this point? If you were on the fiscal side of the equation and on the monetary side of the equation, what would you be doing?
Well, first let's think about the fiscal side. In the package that Biden is proposing, it's a large package of investments in areas where we've kind of neglected them for the last 20, 30 years: healthcare, childcare, education, things in that space, as well as infrastructure, physical infrastructure. But in this bill, it's paid for. Thus far, they're talking about paying for it with tax increases on high-income people. And anything that's paid for is not really conventional stimulus. So I don't anticipate that inflation really has much to do with the argument over that. I think that's more an argument over, do you think we should make these investments or not? On the monetary side, like I say, the Fed laid out before the inflation began that they thought there would be temporary inflation coming. And they told us that they're not going to overreact to it, that they're going to look at this longer average of inflation. And so I kind of hope that for the Fed's credibility, they stick to their plan. What's happening is exactly what they predicted would happen. And so I feel like for them to change their strategy, it needs to last longer than they thought it was going to last, or be worse in some sense.
Austin, let's put the two together, because something that I feel like is coming up is the shift to a greener world, particularly in the energy world, and then what the ramifications we're learning are. Texas deep freeze, for example, soaring gas and power prices over in Europe. Do you think that we could be in a situation where this green shift becomes inflationary in the medium term in a more substantial way?
That's interesting. I hadn't thought of it that way. Maybe. The thing that you're seeing with the green energies is the way that they're gaining so much traction now is they've actually got the cost of those green energies so far reduced that they're more than competitive with a lot of the fossil fuels. The only question mark in my mind is that, as you know, Joe Manchin is going to be critically important to whether they can pass that bill. And Joe Manchin, being the senator from West Virginia, has expressed publicly that he's not as keen on a lot of the green energy components. So they're going to have to negotiate that through, and I don't know how much of those proposed things are going to be in the final bill.
All right, fair enough. Austin, thanks very much. We really appreciate your time. Austin Gilsby,
great to see you again.
Former chairman of the Council of Economic Advisors, looking forward to finishing that, continuing the conversation another time. All right, coming up, it's the day of the year when Apple unveils its newest offerings. We're going to have more on that next. And Guy, you're old.
I am old, and I'm probably going to be getting a shot. I think we've done this now. We can move on from the over 50 conversation.
You did, 30 minutes of Jasper. No. You got more.
Anyway, yeah, there we go. I'm old. We've done that now. We can move on. Boris Johnson is speaking at 10 Downing Street, starting to lay out some of the strategies that could be potentially used to defeat another huge wave of COVID this winter. Going to basically keep further COVID measures in reserve. Not sensible to rule out vaccine passports completely. We're now getting the scientist briefing as well. We will continue to monitor what is coming out of Downing Street. This is Bloomberg.
Started to rise in June and July. There was a peak which then eased off. But there's been a gradual drifting up over the last few weeks. It's stabilised over the last week, but I think we should be careful neither to overinterpret nor underinterpret this. At the moment, things have stabilised to some extent, but we are, as I'll come on to, going into more difficult.
This is Bloomberg Markets. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Mark Bristow, the Barrick Gold President CEO, on Bloomberg TV, 1:30 p.m. New York, 6:30 p.m. London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. Tropical storm Nicholas came ashore in Texas early today, and now it's slowly moving towards the Houston metropolitan area. It's bringing torrential rainfall that is also threatening to flood parts of Louisiana, still recovering from Hurricane Ida 2 weeks ago. Those floods are described as potentially life-threatening, and they're expected to cross the deep south the next few days. China will draft internet rules for the protection of minors. That comes from the Xinhua news service. Beijing reportedly will set up a nationwide platform to deal with online rumors. The government also seeks to have Marxism rule online content. Propaganda will be strengthened based on the Communist Party's achievements. A new survey says that more than 2/3 of businesses around the world are struggling to hire employees. At the same time, 15 countries focused in Europe and North America reported their highest hiring intentions since the survey began in 1962. It was conducted by employment services provider Manpower Group. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So we got 3 hours, and Apple will going to be unveiling its latest products, including its newest iPhones. Here with the preview, Anand Srinivasan, the senior analyst for tech hardware at Bloomberg Intelligence. Anand, I gotta say, you know, I covered the first Apple iPhone launch in my day, and I'm getting a little tired of the constant hype around it. What is something really new going to come out of this at this point?
Short answer, no. We're looking for Apple to continue on its evolution with respect to products, particularly the iPhone. We're going to see the momentum continue from the 5G iPhone that it launched last year. We're going to see 5G proliferate across a wider swath of nations based on infrastructure. You're going to see South Korea, the US, and Japan have more models. We're going to see more models available in other parts of the world. That's the short answer. We're going to see that momentum from a units perspective continue. Remember that they have an install base of almost a billion iPhones. And how often this install base refreshes the phone is what drives unit growth. At the end of the day, there are only 2 vectors in our view that matter for Apple. Services growth, and there's a little drama surrounding that for sure, and iPhone units. You improve one, and the other follows. And it's a cascading cycle. The more services you have, it makes the iPhones more attractive, and it's a walled garden. So, you know, one drives the other, which drives the first, which drives the other.
Yeah. And is it still a walled garden?
We think so. Look, one of the things that we take away from the ruling from Epic last week was the fact that there is no legal issue surrounding the fact that they have a walled garden and they can charge what they want for it. The question is 30% the right number? And can you control the users by not allowing any other payment system, right? Now, for small developers, it doesn't matter. For the large developers, as a result of this ruling, are probably going to set up their own payment systems and sort of propagandize, if there's any such word, that payment system, and they're going to try and make that attractive for Apple users. What happens to the middle user base, the mid-tier developers, if you may, and how much of that moves over to non-Apple payment systems? Worst case scenario, in our view, the absolute worst case scenario is about 72 cents of EPS. Is it easily make-upable in the grand scheme of things from Apple? I make up words as I go along.
No, you're speaking my language. Make-upable is something that I would 100% say. That's the question, I guess.
In our view, yes.
Do they make it up somewhere, and do they wind up? Can they grow their installer base enough to then make up for the service revenue on the other side?
In our view, yes. The big question was: is Apple's App Store a monopoly? And the answer to that was a resounding no. So the question is, how do they then build a consensus around somewhere between 15 and 30%? In our view, the number was never 30%. It's about 25%. So maybe 18%, maybe 15%. How many people move over? Yeah. Those are all the questions to be asked.
And how does Apple usually behave around an announcement like this? More importantly, how does its stock behave? And does it matter that we've had the epic ding going into this? Does that change the calculation as to how the market will respond to what it hears later on?
Yeah, so that's a great question, right? So usually you don't have a ding before the product announcement. The product announcement usually is followed by a sell-off. You sort of buy on the rumor, sell on the news kind of thing. This time around, you've had a ding with the Epic ruling already, so this might be a little different. The long-term question for longer-term investors for Apple is, where does this fit into the grand evolution of the iPhone supercycle? In our minds, we're still early in the game. We're still a third of the way through, maybe half of the way through. And so in the grand scheme of things, we shouldn't take away too much from the event.
All right, really good setup. Anand Srinivasan, Bloomberg Intelligence, thank you very much. To update you on Gary Gensler, SEC's chairman, he's testifying before the Senate Banking Committee. And we know he's going to hit on everything from crypto, Bitcoin, to SPACs, and everything else in between. He says the SEC is considering greater disclosures for SPACs. He also says that only a small number of cryptocurrencies, not securities. He says stablecoins might well be securities, and all of that will then depend on what the SEC can actually regulate when it comes to cryptos. We will keep you updated on headlines as they cross during this testimony. This is Bloomberg.
Again, as I've said to other senators, our role is prescribed by Congress about the issuing companies, these 7,000 or so companies, and the investing public, and to bring consistent, comparable disclosure where investors want it. So in climate risk, investors have been asking for it, and hundreds of companies, amongst the 500 largest, I think it's 80+%, disclose something, but we can bring consistency.
All right, we're 90 minutes into trading right here in the U.S. You have equities around the lows of the session. You have a big move in the bond market. So here's what I'm watching. The 10-year yield sitting now at 126, down by about 5 basis points around the lows of the session. 128 was your 50-day moving average. We now have the yield below that level. The big move, the chunky move, is in the long end. It did start within the belly of the curve, the 5 and the 3 and the 3 and the 7s, and then it moved to the back end as well. My question is, if you wind up having inflation that's not so hot in the CPI number, but you have a strong PPI number, do you get that squeeze and do you wind up hurting margins for the equity market? Also, the second point is that is the Delta variant weighing on demand, and that is actually weighing on consumer price index, and is that now weighing on the bond market?
Yeah, it's amazing how long it's taken to get risk off in the equity market. Just about 30 minutes into the session. We'll be now 54 we are now, but it took around 30 minutes to go negative. What am I watching over here? Look, there's a couple of things happening. UK nat gas prices are up another 6.5% right now. So gas prices continuing to climb. We're going to talk about that in the next hour. We're going to figure out whether or not this is going to be something that gets ultimately worked out fairly quickly, or it's going to be fairly sustained. And the other story I'm watching, Alex, right now is what is happening down at 10 Downing Street. Just down the road, we are seeing a press conference. Boris Johnson is briefing at 10 Downing Street, talking about the fact that he is unwilling at this point, really, to take some of the measures that we saw last winter off the table. Boris Johnson talking about this idea that maybe we will need to see COVID passports being introduced. He's not ruling out lockdowns. These are the kind of things that I think the market maybe hasn't fully factored in yet. We came out of last summer with 4,000 cases on a daily basis. We're now running at circa 30. We are more vaccinated. We are going to be vaccinated younger cohorts, but nevertheless, it does seem as if it could be maybe a trickier winter than maybe Boris Johnson would have hoped for. He's talking about the fact that it's vital to prevent the virus from being re-imported. That doesn't sound particularly good news for the travel sector, Alex.
So let's just paint the picture of what Guy's talking about. I feel like he's like this really depressing Grinch now for the winter time. You're going to be at home, cold, no heat, 17 sweaters, and you're all going to be in lockdown because the winter's going to be worse than you thought. This is not a good picture that you're painting at this moment.
No, so basically it's going to be cold because the gas prices are going to be super high and I'm going to turn off the heating. My children can huddle together. I'm sure they'll be absolutely fine. They'll probably have to be there because of the lockdowns that are coming. I'm painting an incredibly bleak picture. I just think the level of certainty at the moment is quite low, Alex.
But I do think that the bar for a lockdown is going to be high. The bar for a lockdown, again, has to be super high.
Absolutely. But I think it's really hard to predict what's about to happen. The administration in London sounding fairly cautious, I would say. The travel story is going to be related to what's happening with Boeing. Boeing sounding really optimistic. Mark Allen, Boeing's Chief Strategy Officer, joining us in the next hour as well. This is Bloomberg.